Hello, chart watchers, and welcome to this Wednesday, September 5th, Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, today we've had a little bit of selling early on. You can see the Dow Jones Industrial Average, however, has recovered. We are flat on the Dow Jones after being down slightly lower. The S&P 500, however, is down about 12 points today, but it too had gone down, filled gap support to about 28.75. It's reversed back up off of those lows. The NASDAQ getting hit the hardest, but getting very close to gap support and price support earlier today before bouncing a bit still. NASDAQ down more than 1%, down 98 points so far today. The Russell 2000 well off its earlier lows, holding on to price support and its rising 20-day moving average, but it is down about 0.5% at 1725 currently. 10-year Treasury yield jumped up to about the 2.92% level earlier today, but it is relatively flat now. Volatility index with some of the early selling did spike back up over 14 again for the second straight day, but it has pulled back off that earlier high, currently up about 5%. Utilities leading the move to the upside. Kind of surprising the last couple of days, utilities have done well despite the fact that we've seen a pretty good rise back here on that 10-year Treasury yield. Normally, we see utilities heading in the opposite direction, but so far, utilities leading the action. Consumer staples also having a good day. Clearly, money rotating a bit more toward the defensive sectors today as the market struggles. Technology, big drop today, being led lower by software and internet stocks, but it has gone down, tested the breakout level and gap support, not to mention the 20-day moving average, and it is trying to bounce off of that level. AMD continues its tear to the upside. This was a stock that was literally just 2 or 3 weeks ago down around 20. It got up and hit the 30 level today. Facebook, however, heading in the opposite direction, trying to hold on to its post-earnings support level around 170. It opened below that level and currently trading near its low of the day. Facebook down $3 to 168. Workday, this is one of the reasons why we're seeing some weakness in software today. They reported their earnings. I saw a beat. I saw raised guidance, but I also see a chart where it's been going straight up for the past month or so. So I think a lot of good news was built in. We're seeing some selling on the news. I'm not so sure this isn't an opportunity on Workday, but I want to see how it finishes trading today. But WDAY, you can see down $12 or about 8% on the session, certainly weighing on the software group. Okay, Erin, it is the middle of the week. It is a shortened week, though, because of the Labor Day holiday on Monday. How are you doing today?
I'm doing quite well. Thank you very much. Great weather here in Southern California. Gotta love it. So, the market doesn't look like a great day shaping up, but, maybe we'll improve by the end of the day.
Yeah, well, you've got the market cornered out there in Southern California as far as the weather goes.
Yeah, as far as weather. But although we're supposed to hit hundreds this weekend, so, we got a reprieve. I thought it was going to be fall, and psych, it is not going to be fall yet.
Yeah, never mind then. You don't have the market cornered. But we do have a special guest in today. Tim Ord has agreed to join us. We're certainly very pleased to have Tim with us today. And Tim, you are in Nebraska, correct?
Yep, I'm in Nebraska, and we're not having nice weather here. Matter of fact, my rain gauge, I live out in acreage. My rain gauge over the last week is up to 7 inches of rain. So we're getting soaked here.
Yeah, my daughter
still raining.
Yeah, my daughter got married on Saturday. I think the 7 inches that you're getting must have been the same 7 inches we got for her wedding night. It was pretty nasty weather, but still it was a great day. But anyway, very, very happy to have you today. I know that you look at the S&P 500 from a fairly short-term perspective. So I'm very interested to hear, with all the recovery that we've seen in the S&P 500, the breakout recently, what you think about that. And we're going to bring you back in about 15 minutes, if that's okay. And you can let everybody know what you're thinking.
Okay, sounds good.
All right. Erin, I'd say we just go ahead and move on with the schedule and agenda.
Indeed. Well, I know tomorrow Bruce Frazier is going to be with us, Mr. Wyckoff. I'm excited to see what he has to say. I will be giving you the regular sentiment update on Friday, see where the market participants stand. And then I guess you have a workshop on Tuesday. It is actually your turn. So, and I know you don't have anything planned yet. So And then we have a guest, Brian Livingston, coming in on next Wednesday. So very excited. We've got a great lineup for you this coming week. As for today, Tim Ord, as we just introduced him, will be coming up to give us his short-term picture for the S&P 10 and 10 to 1. Our first symbol is going to be Toro Company, TTC. And then we're going to finish the program off with Anatomy of a Trade. And I do have a few. I wish they were better, but I do have a few to discuss, to add to Tom's plethora, I'm sure, of them that he has ready for you. So let's go ahead and get started. Tom, how about some technical news and headlines? What's out there?
All right. Well, there wasn't a whole lot in terms of economic news out today. I actually referred that to in my blog that the earnings season's winding down, really no economic reports. So the market here in the U.S. really was kind of looking overseas and at current technical conditions and kind of trading off of that. And you can see the 10-year Treasury yield really flat today. We did get up, like I mentioned earlier, to about 2.92%. That was the highest level we've seen since we had the big gap down back on August 10th. And that moved lower, which took us down close to 280. So we are starting to make our way back. But as I mentioned recently, we're in this trading range, really, if you go back the last 90 days or so. We've struggled to get above 3% to the upside, and to the downside, we've got this double bottom at about 2.81%. So that's the trading range, and we're sitting right in the middle of it right now. Difficult to say which way we go, but throughout this entire consolidation, you can see that the moving averages, the short-term moving averages, we've had these various crosses back and forth. They really haven't been very meaningful. Same thing with the PPO, where we look like we're heading lower, and then we come back up, we rally, looks like we're strengthening. The point here is that when you get into a directionless market or a stock or ETF, or in this case, 10-year Treasury yield, it's not uncommon to see these moves above and below center line on some of the momentum oscillators, and also to see these shorter term moving averages cross back and forth. Still waiting for some direction, really, overall from the 10-year Treasury yield. Although if we stretch the chart out, I do think that the tendency is, or the likelihood is, that we're going to break higher, because off of the move to the upside in the second half of 2016, we went through a lengthy period of consolidation, broke out, got to that high above 3% back in May, and we're in this consolidation phase. And usually when you're in a trend and then you consolidate, normally you break in the direction of the prior trend. So that's what I look for here. I think eventually the 10-year Treasury yield will break out. I do think that that will help lead some of the financials and maybe some of those industrials back toward the front in terms of leadership. But until we see that breakout, it's all really for naught as we consolidate in this range. Let's take a look at the Dow Jones. Because we have seen some weakness today in the equity market, thought I'd just take a look at some of the daily charts on the major indices and just see what it looks like. You can see the Dow finally cleared that reaction high back in February. Remember the big drop we had in early February, late January? We bounced back, and even though all the other indices recently cleared that reaction high, it took the Dow quite a while to finally do it. And so a pullback down to around 25,750 to test both price support and that rising 20-day moving average should not really be viewed too negatively, in my opinion. And that's what we've seen. So we saw the Dow pull back, I don't know, maybe 300-400 points, but we have started to rally back up. Even today, couldn't really keep the Dow down. We are now up 14 points. So I think technically the Dow still looks pretty good here. Moving on to the S&P 500. The S&P also made the breakout, in this case, above the January high. So this breakout that we just saw was to an all-time high. And the pullback, 2873, I believe, was that all-time high close before we finally cleared it. We went back down to 2876 and changed today. So we got pretty close. Testing gap support, very close to that rising 20-day moving average, which is at 2870. I think as long as the S&P continues to trade above that 20-day moving average, I think things look pretty good in this area as well. NASDAQ really hit, though, on a relative basis, but the NASDAQ had been outperforming on a relative basis. You can look back and see January, we cleared that back in March on the NASDAQ, whereas we're still trying to clear it on the Dow, and we just recently cleared it on the S&P 500. So the outperformance in the NASDAQ, to me, is very bullish, because this does house many of the more aggressive companies out there. And so if you're getting outperformance in aggressive areas of the market, I think that bodes very well for a bull market continuing. Here you can see the NASDAQ over the past few days. We pulled back. Today's low, 79.62. The 20-day moving average, 79.52. So I don't have any problems with this pullback to test the rising 20-day. When you get into these extended advances like we saw in the latter part of 2017 into January 2018, notice we pulled back many times to the 20-day moving average, maybe just below, before continuing our advance. So the fact that we've broken out to a new high, pulled back, hit the 20-day, I'd be careful about drawing too many bearish conclusions at this point. Let's see. I know September, as Tim and I were talking before the show, and I think he actually posted in his latest article. He can maybe talk about that in a bit. But, we've talked about September being a weak month. I know Tim also mentioned it in his latest article. And so we could see some selling in the near term. But unless the technical support areas break, I'd be careful, again, about drawing too many negative conclusions about being down for a day or two. I know in a bull market, sometimes you just want to keep going higher every day, but these pullbacks are healthy. And I think so far, this one is fine. The Russell 2000, very similar. Breakout here above the double top. This was really an ascending triangle, equal highs coming across, higher lows. We made that breakout. And today's pullback tested that rising 20-day, 1714. Today's low is 1713 and change, and we've bounced off of it. And now the Russell 2000 only down about 7 3/4 points after being down about 20 earlier. So again, we're seeing a lot more recovery in the market off of those earlier lows, and we are bouncing from some key support levels. I find all of this to be pretty bullish. If you take a look at I'm going to go and pull up the top 10 on the S&P 500 in terms of percentages. And what you'll see are a couple of stocks. When I go through here, this is a nice little feature. When you just hover above the symbol, it kind of gives you the chart, and you can see what you're looking at. AMD's been a monster, no doubt about it, continues to perform well, but it is overbought. I find this particular stock, though, Xylem, to be fairly bullish. Look at the flag pattern. I wanted to pull this one up. Let's take a look at it a little bit more in depth here. But this is just a quick example of how you can find stocks that are performing really well. So here's your push to the upside. Here's your flag pattern, maybe even like an ascending triangle. And it looks today like we're getting a breakout, and volume is not light. Already over 500,000 shares. We got another 30 minutes to go to the halfway point of the day. So I think we're probably heading for over 1 million shares today on the stock, which, if you look back, is pretty solid support on XYL. So this breakout here would be somewhat bullish. Now, there is a little bit of overhead resistance. I'm pulling up the 1-year chart, because as we're making this breakout, keep in mind that we've got a triple top that we need to negotiate around 79. So sometimes I think it's helpful to go back and look at a bigger, longer-term chart just to, get a better feel for the overall trend. I think we do go higher in time, but I wouldn't be surprised if we maybe pull back off of 79, because we have failed there. That's where we've seen sellers come in the past. So pull back, maybe to test the rising 20-day moving average at some future point, maybe a few days or a week or two from now, might present a pretty nice opportunity here. This is a stock that's in the machinery, industrial machinery group, which has really begun to perform well over the past couple of months after languishing for about 4 or 5 months. And if I go down here and show you the group relative to the S&P 500, it seems to have maybe put in a double bottom in terms of relative strength. And you can see that relative strength starting to pick back up again. So if the group continues moving higher, then certainly XYL could also move higher and lead to the upside, something worth watching. Last thing I wanted to mention, software really struggling, but like the NASDAQ, we had a really good, solid PPO. We had broken out. And when we pulled back here to this 2,300 level, we're testing the breakout level and also the 20-day moving average. So things don't look quite that bad. And here is Workday. This is the software stock that reported earnings, actually reported really good results. And I think closing back above the 20-day moving average on this kind of volume after all the selling, I think wouldn't be bad entry. I think WDAY actually looks much better than it's being treated today, based on both the fundamentals and its technicals. Okay, we got a few upgrades and downgrades. Erin, what do you think of them?
All right. I thought there were some interesting ones for sure today. Let's go ahead and take a look. I've got three upgrades and two upgrades and three downgrades for us today. So let's go ahead and let's start with the upgrades. So I'm going to get to CenterPoint Energy first. This one was upgraded from a neutral to an overweight by JP Morgan. I went ahead and annotated this for us. Obviously, I'm liking this PMO. It was headed in the opposite direction, though. It was headed down until we got this upgrade and the big gap up. But I think this one looks pretty good. I wouldn't chase it per se, but I do believe even if you got it back down to that 28.50 level, I think it would be a bargain. Because with this upgrade, and there is some really nice upside potential here, up in that 29.50 range at that high back in November, December timeframe. So I think that one looks fairly interesting on the upgrade. The other one was OLED. Citigroup has, upgraded this initiated a buy on Universal Display. So thought we'd take a peek at this one. At first when I looked at it, I saw this PMO and it's overbought, but it is starting to turn up a little bit over its signal line. And you can see we have had higher readings on that PMO. With this reversal on this rounded bottom, it does look pretty good here, but I would be a little bit worried about this overbought condition. There is room for accommodate more upside, so maybe you can see the upside to this gap. Looks like it might want to come back up and finally fill that gap from earlier this year, back in February. All right, a couple of downgrades here. Canadian National Rail Company. This one really difficult drop here out of this rectangular pattern, a rectangle pattern. If you do the measurement of this pattern, you would expect the decline to go down to about this area of support that matches up nicely with these two 2018 tops and this trading range that we had back in May and June. So I think this one, I think I actually did put on one of my watch lists. Obviously, I wouldn't be getting in when I see the PMO headed in the wrong direction. But this one could be very interesting if it gets down to that support level and is able to hold that. All right, another downgrade for us. CSX, BMO Capital took this from a market outperform to a market perform, so not horrible. Just really overbought at this point. You could see the PMOs on a sell signal in overbought territory. Again, would be nice to see a little bit of a pullback here to that $72 level, but I think I'd probably leave this one alone. It might take a little bit more time to wind a bit back down, get out of that overbought territory. It is a nice scooter on there. You can see it's been in the strong zone here, in that hot zone, showing internal and relative strength. So it is a good, I would certainly hold it if I had it, and maybe get a little worried if it got below 72. But on a downgrade, I think that one isn't doing too terribly. We've got Myriad Genetics. This one was downgraded by Barclays from a neutral to underweight. And you can see this was a really difficult drop today with the big gap down, but it is sitting right there on support from this July, August tops that we have here. So this one I think is really interesting. It might require a little bit more downside. It might need a close a little bit further down toward the $45 range with that PMO topping like it is. But, ultimately I was looking at it and you could see it's a flat, the tops here are flat to maybe rising here on the PMO. So I think that actually could be showing some improvement, that it does look pretty healthy considering. I would like to see a better confirmation from the PMO on these tops, but it really didn't deteriorate too much, and it's not completely overbought at this point. So, and those were all of the upgrades and downgrades that I had. So it's time to bring in our special guest, Tim Ord.
I'm here.
Yes, it's great to talk to you in person. Tim has been a mainstay of the Decision Point Top Advisors Corner back before we had merged with Stock Charts. And Stock Charts has continued the Top Advisors Corner, but it's been, I've known of you for a very long time. And it's great to actually get a chance to talk to you rather than just texting or email. So welcome to the show.
Well, thank you. Let me pull my chart up here.
Hey, Tim, while you're doing that, I saw, we talked a little bit. You went to University of Nebraska, and I remember back in those days, and I won't say what year it was, but I do remember I'm a huge college football fan, and I remember Tom Osborne was the coach back at Nebraska in those days, and they had such a great rivalry with Oklahoma and Barry Switzer. Are you a college football fan?
Yeah. Oh, yeah. I am. Actually, I was there when Osborne was there. Actually, I was there when Devaney was there, right before Osborne took over.
Okay.
So I grew up with Nebraska, watching it. And so I'm a big fan. Obviously, we haven't done well over the last 15 years as far as football goes, but we got a new coach in, Scott Frost, and we hope we may get a turnaround here. We'll have to wait and see. We got rained out last weekend, so we didn't have our game, but.
Oh, wow. That's kind of unusual to get rained out football.
Yeah. And plus we were on television too. So I don't know how that was rectified or what, so because there was no game. So
Right.
That was interesting what happened after that. But we got rained out. That's how much rain we've had here over the last week. It's just way a bunch of rain. So.
Yeah. Well, I will say that, my daughter went to Virginia Tech, and so I'm a big Virginia Tech football fan. And we actually traveled out to Nebraska several years ago, and I didn't go, but I had a number of friends who went. When they came back, they said that the fans in Nebraska were the nicest fans that they had ever. I mean, any football game. Usually, rivalries and football fans can be kind of mean, but apparently everyone I talked to said they were welcomed into Nebraska. So pretty nice folks.
We're out in the middle of nowhere, so we love to have company. I'll put it that way. So.
Yeah, I have to say that Nebraska fans that came out for the USC games were always just really classy. It's always very welcoming, as we always are.
All right, so what do you got for us today, Tim? Because we got the S&P 500 breaking out to record territory. You think this lasts?
Actually, on a short-term basis, I think we might see a new high. I got a chart up here now, and this is just short-term, and I'll kind of go through it. It's all geared toward short. Actually, what it measures is kind of measures panic in the ticks and trend, and so I kind of created indicators with it, and it's pretty simple what I look at here, but let me pull up a pen here so I can draw here a little bit. But this is just a 3-day average of the trend, and normally gets up around 1.5. You're near a short-term low. And I'll just point these out, and it works. It's nothing's guaranteed, but I combine that, and we almost hit 14.5. This chart I did a couple of days ago, it got up to 1.4, and it's not an exact number, but around 1.5 you get there on a 3-day trend. Normally that shows enough panic that you may be going into a short-term low. To help support that idea, I also have a tick trend ratio and also do a 3-day average. And when you get both of them to say the same thing, in other words, both can get in bullish level, the success increases on a short-term low. And for instance, here we got the trend again around 1.5 range, and you got the tick trend ratio around minus 150. Then that picked out this low right here. This low, we didn't have the 3-day trend picking it out, but we did have the tick trend ratio pick it out. Here you just had the 5-day or 3-day trend picking it out. Here you got both of them picking it out. So I just wanted to point out, but here over last Friday, we had the 3-day trend get up to about 1.4, and we also got the tick trend ratio down below 150. And so we went long on that panic in the ticks and trend. We knew the downside was probably the January high, which is what this line is right here. And so that was support. We pretty much hit it today. And the downtrend's been, we don't see a sign of weakness here at all, because the market kind of goes down intraday and seems to come back pretty much on the close. And also, if you look at the Dow, we don't have it here, but Dow went up 4 days going into last Wednesday. 81% of the time, after 4 days up on the Dow will hit, at least test that previous high, if not break it, within 5 days, 81% of the time. So we're looking for another high, at least go back up and test last Wednesday's high on the S&Ps. Well, we'll break through it and keep going, don't know. But in our view, on a short-term basis, we think we'll at least do that. So we're long on, again, on Friday, right 2901, I think, on the S&Ps. And so far, we're kind of holding here. We don't see any reason to get out of the position. So on a short-term basis, remain long. Go to the next chart.
Does it bother you at all, Tim, to see the, the market kind of just sitting here, or even being down earlier today, knowing that September's a bad month? I think you had referenced that in your last article. I think.
Yeah, there's seasonality in November. Actually, the first day down, first day of September is down. The whole month's down. I forgot what. I have to go back and look at percentage, but a high percentage of the time, something like 70-75% of the time. So I don't think actually November is going to be up, or not November, but September is actually going to be up. But we're not going to probably be down a whole lot either. So I'm more neutral. I'm not really bearish or bullish in September here, but on a very short-term basis, I think over the next several days or week, we might go back up and test last Wednesday's high, or maybe even break it a little bit. But beyond that, I think the market could have trouble, and it could, I guess, I think September to me is more going to be a consolidation phase than anything. Also, we had April, May, June, July, and August being up. And 3 months later, the market's up 100% of the time when that has happened, going back to 1970. So, we got a lot to look for, in the months ahead. It's just, we have to get through September. So
I'm a historian, but I think I just met my match. I mean, you're coming up with some pretty good stats here that I wasn't aware of.
Well, but yeah, I kind of look back on those stats, but September is, like this again, seasonality is just, actually August seasonality wise was not a good month. And, we broke out to new highs. So right. Historically, August has not been a good month, but we'll have to, wait and see here. But here's another chart. Here's, I do a lot of with ratios. Seems like out of the more ratios, a lot of these ratios don't mean anything. So I have to go back in time to figure out and look at them and see what they actually do. Here's a tick VIX ratio, 4-day moving average, and kind of said the same thing as a tick trend ratio did. This chart was made yesterday, but anyhow, the tick VIX ratio with a 4-day moving average is getting bullish territory, suggesting that we're at a short-term low. And I pointed out the previous ones going back for the last 6, 7, or actually last 9 months, and they seem to work out pretty well. Back in picked out this consolidation right before the uprise. This big mess going on right in here. The said, we're at a short-term low, and it got kind of messy basically back in July, and that turned out to be a decent low, and we're back here again. So we may go back down to the January high, which we pretty much got there today, and we're probably going to find support according to this ratio. So I'm thinking, well, how high is high? Do you have an indicator for that? Actually, I do. So these three different indicators. You got the tick VIX ratio, you got the tick trend ratio, and you got the 3-day trend, all at near bullish levels. But how do you pick the next short-term high? well, the tick trend ratio also helps with that high. Is also kind of manages the exuberance of the move along with the panic of the move. Here I pointed out, going back, looks like about 10 months, the bottom window here is the tick trend ratio again with the 3-day moving average. But if you get above around 300, it's usually not a good sign. We haven't got there at that last high, even though the market's consolidated here. It did get in bullish territory down here, but it never got up in the bearish territory. I didn't pick out every high, but it picked out that little minor August high. We had a week or two of consolidation. The June high, a little bit early, but it pretty much saying you were getting too exuberant to the upside. You got a decent consolidation. In the May high, market went sideways for looks like about 3 weeks. Didn't quite pick out this high. There's a little minor high there. It got too exuberant. We had a big down day, right there. And I kind of picked out these highs. I actually get 2 indicators, saying that was probably going to be an important high because it got too exuberant, twice in a row there. A little minor high here when we picked out a consolidation. This was a fail right there. The market just kept trekking up. That one here picked out the consolidation phase. And so what I'm looking for is if the market got pretty much oversold, what I called kind of a panic level according to ticks and trends, it may on this next rally up get too exuberant to the upside. If we get above plus 300 on the tick trend ratio, 3-day average, it may step out of that position if I don't find anything else to have a reason to sell. So that's what I'm kind of looking for on a short-term basis. So if we get a decent pop up here and things get too exuberant, I'll probably step out of that position. How high is high? I don't know. I thought we might get up to 3,000. I think that's pretty optimistic, but we may get above the previous high, 29, 25 range, maybe, possibly. That's, I don't have a crystal ball, but I do have my indicators, and when they do get overbought, if they do get overbought on this next rally, I'll just step out. This is a long-term chart. The only reason why I'm bringing this up is it's kind of a momentum chart. Normally, markets don't peak on RSIs. What I'm trying to say here, this peak we had back in 2015, RSI, it was, 60 range. It peaked in 60 range. At this major high back in 2011, it did touch 70 there, but most of the time it was below 70. This major high back in 2007, it peaked below 70. So when they say RSI is overbought at above plus 70, longer term, that's bullish. On a short term basis, you could have a consolidation. But back on last Friday, we had the RSI hit 71.89. That's usually not a bearish sign. That's a sign of momentum to the upside. And I point out some other times when it gets above 80, usually that's a lot of times it's initiation of a continuation of the uptrend. If you notice here, when we hit 80 range on the RSI, we did have a high here. What happened? I can't really erase that. But anyhow, what I'm saying here, RSI hit 71.89 on Friday. You can have consolidations, but that's never the end of the up move. So we might stumble through September, but in my view, we won't have anything significant to the downside because of the RSI did get above 70. Like I said, when RSI is above 70 for the first time in 7 months, while above the 200-day moving average, 2 weeks later, the market's higher 94% of the time. So, what I'm saying is market may go up, hit a high, come right back down to the January high and go right back up again. That's what I'm thinking is going to happen. So momentum is pretty strong here. So, I'm not really bearish at all, especially with the next 3 months being 100% chance of being higher. So um, we could have some minor pullbacks, but I don't think anything significant.
Hey, Tim, when you're looking at the S&P 500, does it matter to you what's leading? I mean, if you're looking at the various sectors, does it bother you if the strength is being led by some of the defensive areas instead of more aggressive areas? Does that enter into your trading strategy at all?
No, not really. I kind of look at how I look at the markets. I look for panics and exuberance, and for the short-term trading, then momentum has a lot to do with. I do quite a bit with the Bollinger Bands and stuff, but I really don't break it down into what's leading the market and stuff. Maybe I should. I haven't. Technical analysis is just one big learning experience because you learn something every week. At least I do. At least I try to do anyhow. So maybe down the road I'll start looking into that if it makes sense. It probably does make sense, but to me, I'm always I'm a math major in college, and so I'm always looking for statistics type things. So, but
I love it. I love it. Don't stop. Oh, I like hearing all these stats for sure. Do you have you been? You recognize that we're in a strong market and we got a lot of momentum going forward. Do you short the market during these periods, or are you only looking for long entries?
uh, depends how exuberant it gets. I guess if you get the I think my next chart here is, I mean, these times when you get the equity put call ratio readings, which is what the CPC is or CPCE is, the equity put call ratio readings, I take a 3-day average, and we did hit that on this last high last week, and that's kind of exuberance to the upside. Um, right now I really don't have a desire to short the market. I think if the market does pull back, if we get to panic, I'll just keep looking for the long side because I don't think anything worthwhile to the downside. The way I see it right now, that may change over the next couple of weeks, but I don't see a 5% slam to the downside. Maybe 3% at the most, but as it sits right now, I think we'll hit some new highs. We'll come back and test some previous highs, like the January high, and that's about the worst I expect. But the equity put call ratio readings do suggest that we're going to have a hard time kind of going higher here, because the last few times we hit the 3-day average of the equity put call ratio readings getting below 0.55, the market has struggled, and I point that out right here and right here. We did have a consolidation there and had a consolidation there. So, so the upside is not going to be huge here, even though I'm long the market. If I can make a percent or two, I'm going to be happy with that. So,
yeah, I will say, just looking at that chart, the readings that you had back in June below 0.55, and then also back in March when you went below that 0.55 level, both of those occurred with price resistance. The S&P up against price resistance, and I noticed both of the readings that you saw back in December, or even the ones that went into January that were well below 0.55, was when the market was in breakout territory. So I'm wondering, with us being in breakout territory here, whether or not, we'll get the pullback that we saw the last two times. It seems to me like, we've already made that breakout, and technically I think that would attract more buyers. So maybe we kind of overlook that and move higher like we did back in December and January.
December. Oh, you mean where we just consolidate the moves and stuff, and
yes, instead of the selling. Yep.
And then start working higher. Yeah, that's what I'm thinking is going to happen here. I think we go up here and maybe we hit a new high, get everybody excited again, and some of my indicators that tech trend ratio gets above plus 300 or something. I'll pitch it back, and maybe we'll find support back around 28.75, or especially if we get. Normally, you get panics from my experience. You get panics and ticks and trend at support when there's even when everybody thinks there's a support area. If you don't get panic on it, the market usually follows right through that. So if the market does produce panic and you have a support area, chances are that support's going to hold. That's my point.
Mm-hmm.
So, and I've seen big declines to continue where the ticks and trend don't panic at all. And because everybody's evidently comfortable being long, and they think it's just a pullback and an uptrend. And those type of pullbacks where you don't get panics and ticks and trend turn out sometimes to be disastrous. So we'll have to see how this trade turns out. But for right now, I'm long, and it still looks okay, and I don't see a whoops. Okay, that might be my 4 graphs, I guess, but I can take questions and we can go from there.
Okay. Do you trade individual stocks or do you only trade the S&P?
I trade pretty much everything. I'm kind of into the gold stocks right now. They're super cheap. The sentiment, the COT on the commercials a couple of weeks ago, I think last week we're at 7K short, but the week before I think it was 16 minus 16 commercials. Gold commercials were short only about 1600 short, which is the lowest it's been since going back in I think November 2015. I think we're around 3,000 K short back at that time. That was a major low back in gold. So commercials, the way I'm reading them anyhow, are extremely bullish in here, and the bullish levels we had last seen at the last major low of 2015. So even though gold stocks are kind of got beat up here over the last month here, I'm actually on the bullish side. There's actually some of the gold stocks haven't really moved up yet, but they are drawing bullish flags and stuff like that, and those are the ones I'm trying to pick out. So
does it not bother you? I mean, I've had a friendly debate ongoing here, both with Erin and Greg Schnell. More so with Greg, because I think he's more of a longer term. He looks at gold a little bit more longer term, and he really is bullish gold right now. So he kind of agrees, I think, more with what you're saying, the way it lines. For me, the reason that I argue against gold is I'm a momentum trader, and right now, clearly, the momentum in gold has been to the downside. If you look at, say, the GLD and compare it to the S&P 500, it has literally been a ski slope since April to the downside. And if I'm trying to outperform the S&P 500, I want to try and get into areas that's outperforming, not underperforming. So I don't disagree that gold could go higher. I guess from my perspective, I'd want to see it begin to start outperforming before I would be more interested.
Yeah, that's true. If you're a momentum trader, you're standing aside. But if you're a sentiment trader, you're looking at the product. And I do a little bit of both. Sentiment, because I do put call ratio readings, I do COT readings and stuff. But sentiment on gold, sentiment trader, which I ascribe to, has a lot of indicators that sentiment wise on gold is 27-year lows that we haven't reached in the last 27 years. So if you're a sentiment type person, gold, relatively speaking, is sentiment wise is very good. We'll have to see. Nothing works all the time, but at the moment, there's no momentum. The momentum's obviously down, and I guess you're catching a falling knife here, as far as gold is concerned. But the sentiment has reached extremes that haven't seen in years, so I think it's a good opportunity. So
yeah, I would add too, you're from a seasonality perspective, gold has outperformed the S&P 500 of roughly 2/3 of all the Augusts and Septembers going back over the last 20 years, and their average return, the average outperformance by gold versus the S&P 500 during the months of August and September have been almost 5%. So there's definitely some historical information that backs up, what you're saying from a sentiment perspective as well. So
yeah, that's right. Actually, August, which has been terrible for gold, and September is one of the 2 better months gold for the whole year. So. Yeah. So I don't know what September is going to be before the month's out, but we'll have to wait and see if things start to gear up here. So, But that's one thing I like. But getting back to the S&Ps, we're kind of coming back here, and we got some downtick readings. So,
Hey, I do have a question, Tim, from the chat room. They want to know if you always use 3-day targets, the 3-day.
I mean, three period moving averages.
Yes, that must be what it is.
Well, actually, I go back and look, kind of trade it. There's other ones that work on 4 days, but 3 days seems, from my experiences, to work out the best. And I've been doing this for a number of years. I've tried 10-day, 5-day, 7-day, but 3-day seems to work for the best for right now. What's on these indicators, I notice over time they kind of change a little bit. So what's working right now may change a year from now. So a year from now, 4 may work better. And it's a gradual change. What happens, the 3 starts working less, and the 4-day or the 4 period moving average starts to work better. So I'll start to switch over to 4. It doesn't abruptly change from a moving average of 3 to 4 overnight. So, but right now, the 3 period moving average of the tick trend ratio works at the moment the best. So,
all right, excellent.
I've got one other question for you, and I'm going to pull up a chart and just kind of get your thoughts on it. You may not even care, but we'll take a look at it anyway.
right.
But when you look at the S&P 500, and here's the chart. Here on the top, I have the S&P 500. This relates to the poll, and we're going to bring up the poll later in the show. But maybe this will give everyone some food for thought before they fill out their answer. But the S&P 500, since about May, and of course, a lot of this has to do with the trade fears and war and maybe the dollar and maybe a lot of different things. But here you can see the S&P 500 since May has been going higher. The German DAX has been going lower. The Shanghai Composite in China has been going lower. Here's your Hang Seng going lower. The Nikkei has been pretty much flat. And over in India, we've actually seen some pretty good strength. But does it bother you? Because I'm bullish the S&P 500 as well. I would say I'm very bullish the S&P 500. But does it bother you at all that other markets from around the world are not participating in this rally?
I think it's actually for us a plus, because I think some of the money's coming here.
Yeah.
If they're not performing, over there, they're coming to our markets. So it could end badly, in a few years from now. But right now, I think it's a good thing. I don't know how high we're going to go, but there's a lot of historical stuff that maybe in 2019 we could have some trouble, but I don't see any trouble other than minor consolidations this year. I think my point of view is we're only halfway done to the upside. I think we could reach 16% for the year. That's a possibility. So I'm kind of bullish beyond this month. October could find a low where we start breaking higher, because statistics show that during midterm elections, the market doesn't bottom in November; it bottoms actually in October. So I think October would be the time that the uptrend actually starts, and it may not start too far from where we are right now. The trouble is, we may not move very much between now and October. Mm-hmm. But we get some panic in October. That'd be the time to start long, and I think it looks, like I said, November or September rather is probably not going to be a hugely bad month, but it's not going to be a hugely great month either.
So. Yeah, October over the last 20 years, a lot of folks may not realize it, but October has been the best month for the S&P 500 over the last 20 years. And it gets a bad name because of 1987 and 1929. But if you throw out those outliers, October historically has not been a particularly bad month. In fact, it's been a fairly bullish month, and it starts off that fourth quarter when, of course, the fourth quarter has been the best quarter for the market going back many, many years. So I think that we could be on the verge of going a lot higher. One final question for you before you go, and this has been great having you on here, Tim.
Thank you.
Do you use your short-term signals do you use them for leverage? Do you trade options at all?
Yeah, I do. I actually the best signals I try to look for, and actually we're starting to enter into the best option period, is usually September, October, and November for option trading. And what I try to do is find panic, preferably going into expiration week, and I'll actually buy expiring options for that week. So I'm kind of maybe that's too speculative, but I've had huge gains made where I'm out of the money a little bit, and so yeah, I do. And ticks and trend is a great tool to define panic, because that's when panic hits. You're hitting a short term low. But yeah, I do SPI or SPY options.
All right, I do want to point everyone, if you go to the blog articles at the top of the member dashboard and click on that, and then go to the right-hand side and scroll down under top advisors corner, that's where you'll find some articles from Tim. You definitely want to check it out, especially if you're a short-term trader. I think that you've shared some great wisdom with everybody today, Tim, and certainly appreciate you coming on Market Watchers Live with us today.
Well, thank you for having me on.
All right.
Absolutely.
Yeah, I know Erin's worked with you longer, but it's great for you to finally get you on the show with us. Been a pleasure.
Thanks. Thank you, Erin. Nice talking to you.
Yes, absolutely.
Okay. So we got the 10 and 10 coming up.
Yeah.
Erin, you ready for it?
Yes, I am right now putting that RRG on the daily. Let's go ahead and share that so you can see what we have going on. All right. We have quite a few requests. I mean, it looks really messy here, so I'm going to let's take some tails away here, make it a little less messy and fit that. So anyway, we like to look, I base it on Julius's, he is the creator of RRG, Julius de Kempenaar, and I use his northeast direction for the RRGs. So there are a few of these that are going to be pretty interesting that I won't throw in there, but we don't use the RRG for everything. We also look at the sectors and see where we have the various requests. But today, technology, healthcare, and cyclicals certainly dominating the request board. So let's go ahead and get started with the first one, Toro Company, TTC. And everybody vote in the chat room, like the ones that you want to see, and the most popular will be the next symbol.
All right, first one here is Toro Company, TTC. When I look at it, and this is going back a year, you can see over the past, I'll say the last 6-7 months, we've been in a fairly narrow range between 57 to the downside and about 64.5 top side. That, of course, coincides with gap resistance and some reaction highs up near 64, 64.5. So I think this is the trading range. I do like the volume recently coming in to the stock and the fact that we're uptrending, but we've seen this before. We saw really nice volume back in February when we had the huge move back to the upside and we couldn't get through 64. And then we saw it again in June. That final high right here was on very heavy volume up, and that was at 63.5. The next day we went over 64, but couldn't get through. So while the volume is looking good, I just don't like the reward to risk here currently with the stock. I think you have a couple of dollars maybe to the upside, but I've got even almost $2 just down to the 20-day moving average, which during an uptrend would be a normal area where you might see a pullback. So I just can't set up a trade. I guess if you want to use this double top breakout and just say if we close back below, say, 61.75, then maybe you could set up a short-term trade that makes sense. But my biggest problem here is it's just been in this range for so long, and it's currently still sitting in the middle of it, maybe a little bit toward the upper end. And so I don't know that I like the reward to risk enough to take a position. So I would just be on the sidelines watching.
All right. Let's go ahead and look at the most popular request, which was Alphabet. Google, of course.
Yeah, Google, okay, it's had a nice rebound. I like that. Last time I looked at it, it was down around 11.85. So wasn't feeling too good about it because I own it. But if we get back up and close anywhere near the open today, I would find this long tail to the downside to be very, very bullish for Google. So let's see how we close today. But so far, so good with this big reversal. Check out the volume the last 3 days. This is not the kind of volume you want to see on a breakdown. So I would simply want to make sure that this gap support maybe go a little bit below. I've actually, when I was looking at mine, because I own it, and I'll talk about it a little bit more with the anatomy of trade. But 1190, that area for me from a closing stop standpoint was going to be pretty important. And I'll talk about that some more. But for now, if we can reverse back at anywhere near that open or close above the open, which was at 1209, I would find this to be very bullish coming off this downtrend on Google. So let me just quickly annotate that gap support level because I do think that is something to watch pretty closely. And that is right about where we opened today. That 1209 is just about where we closed back in July. And that was right before earnings. This was the gap up with earnings and the breakout. So we've had great support around this 1205, 1210 area. And if we can get a reversal, close back up around that level, I'd be pretty bullish Google.
All right. All right, let's go ahead. This one's been in the news. How about Nike, NKE?
All right, I wrote about Nike in Chart Watchers last week. Just keep in mind it is one of the better performers in the month of September. So I do think this pullback, we were overbought. RSI was near 70. We just crept back into the 40s. I think we've got really good support down at about 79, 79 and a half. And that's right about where we're sitting here. So I am a fan of Nike. Here was the gap up on very heavy volume back in June. We consolidated, then we broke out above, and you can see that there was even on an intraday basis, maybe we go down to about 78, 75. But I think this 79 area, 79, 79.50 is a very good, solid reward to risk trade area on the long side. I suspect in the short term, we will go back and test that 83 level and eventually break above. I like Nike. I like the volume trends. I like the breakout, the push to the upside. So I expect higher prices, and I think this is an entry area in the short.
All right. Sounds good. Let's see. ETF, regional banking, a lot of interested in financials. So yes, KRE.
Okay. I'm a fan of the banks. We haven't really done a whole lot, but most of my bullishness with the banks is simply a result of, well, it's really two things. Number one, I think the 10-year Treasury yield goes higher based on everything I'm seeing on the charts. But currently, we're sideways consolidating. And as a result, we're seeing the regional banking ETF sideways consolidate for the most part. The other thing that I like, though, is with the dollar moving higher, I like the regional banks better than the large banks. I do think that the dollar continues to push to the upside. And we were seeing a lot of outperformance by the KRE relative to the large cap banking ETF. So this is a group that I like. I'm not ready. I'm not in it. I don't own them. I'm waiting for momentum. I'm waiting for something to happen where we actually make a big breakout. And the two key areas, I think you've got a recent high, which is right here. And then the more intermediate high at 65.50 is the big one. So the problem with trying to trade it here is if I use the recent low as support, we're sitting here, obviously, just to get to the next resistance level, it's not even a 1-to-1 ratio reward to risk, which I don't like. And even if I were to step up and go up to the 65.50 level, we're talking about less than $2 to the upside with more than $1 to the downside. I just can't get a trade set up on it right now. So I like the group. I think we do eventually break out, but I'm going to hold off on trading it.
All right. Our only consumer staples request, Constellation Brands, STZ.
All right. Well, I'm going to pull this up on a relative chart because I think what you're going to see is that obviously it is an underperformer. The distillers and vintners have been downtrending here over the last few months, and that has resulted, if we go all the way down here in the bottom, look at the group relative to the S&P 500. It's been underperforming now for about 4 months. That's a fairly long time, and it's hard to outperform the market trading stocks within this group, and that's what's happening here with Constellation Brands. So I think that there is hope in that. I believe we just hit a pretty big gap support level that had not been tested. There was a big gap up back in October of last year. Notice we went right down to that level, held, and started to bounce. So that's the good news. The bad news is that I think the short term, we've got to get through that high on this gap down. Look at the volume. We gapped down to about 209, moved intraday up to about 212.50, and that's where the sellers kicked in. Notice the 50-day moving average also sitting at about that same level. So this is the range right now for me on Constellation Brands. I don't like it because it's down. The group is downtrending, and it's been downtrending relative to the S&P. So I'm going to pass on it, but it would start to look a little bit better technically if we can clear to 212.50, and especially if it comes on some volume.
All right, excellent. How about, let's see, our only energy sector request, HP, Helmerich and Payne.
All right, another one we'll look at on a relative basis, but you can see the industry group again has been downtrending. The stock is actually holding up pretty well relative to what the group has been doing, and that's reflected here in HP versus the industry group itself. It's just broken out to a relative high. Now, the relative strength is there, but the absolute strength is not. And so we're nowhere near, breaking out. We've got this triple top, still about 10% above where the current price is. But I do think from a technical perspective, because we do have a relative leader, if we can get a breakout above this double top at about $67, I'd start to like it a little better. So far, we were strengthening. We pulled back. We're holding that 20-day moving average. If we can bounce off the 20 and break out, I give this one some hope, especially if we start to see money rotate back toward the group. But it is hard to get a lot of strength in an individual stock when the group is being overlooked. And that's one of the problems right now for HP.
All right. The next one is ARWR. It's a biotech, Arrowhead Pharmaceuticals.
Ooh, okay. A lot of volume on the last selling, so we don't want to lose this price support level at about 14. Looking at the relative strength, first of all, biotechs have not been very strong, but this has been a strong stock relative to the S&P and also relative to its peers. But you can see that just on a relative basis, biotechs need to get this relative breakout to really get going. Technically, watch the support at 14. And the reason I say that, we had a big area of resistance right here at 14 after moving up on solid volume. We broke above on better than average volume, and on these pullbacks, many of them we have held. So we got up to 17.5, and on these pullbacks around 14, we've been holding. So if you see the stock start to lose 14 and the volume begins to accelerate, I would be careful. Otherwise, I would expect it to continue to lead.
Okay. Let's see, this one's having a great day. Semiconductor Advanced Energy Industries, AEIS.
It's having a great day, but it's not having a great year. So this is one that on a relative basis, you can see semiconductors going sideways, but this stock has continually moved lower and lower. It's got great support at about 57.25 to 57.5. But the problem is that on a relative basis, this is not one of the better performers. So the semis are trying to make a breakout. They've been trying to make a breakout. And I'm talking about the DJUSSC, $DJUSSC, which is right here. You can see all of these tops coming across right at about 35.50, 35.60. If we could make that breakout, that would certainly help the stock. But then look at the relative strength of the stock versus the semiconductors. A little bit of strength here today, but overall, this has been a stock that you really want to avoid. So it is up a little bit, but I'm not seeing anything yet that would get me excited. Perhaps big volume move through 62.5 might do it. I'd have to take another look at that point. But for now, I would just treat this as a range-bound stock.
All right. Let's see. The next one would be American Airlines, one of two industrials that were requested.
All right.
AAL, of course.
Yep. We've got some overhead resistance. Well, first, look at AAL relative to the airlines. So you're not getting one of the stronger airlines. That's a problem. And another problem is trying to get through price resistance. Right here was the low back in early May. We bounced, went back up, filled this gap. Here was another gap resistance area. Notice how we went right up to that, couldn't get through, and then rolled back over and broke down. And volume picked up a little bit on the selling to the downside. And now here we are trying to get back through this resistance area. Volume trends have turned a little bit more positive. So maybe I'm seeing a little bit of light, at the end of the tunnel, but it could be that truck coming. So I'd be careful. I think if you lose about 38.25 to the downside, today's low was 38.88. I think if I went much below about 38.25, that would be enough downside for me to get out. Again, a lot of relative weakness in this stock relative to its peers and relative to the S&P 500. So I personally would avoid it.
All right. And our last one, I know how much you love gold and the gold miners. So how about GDX? Gold miners, they are rising nicely on the RRG.
I'm not sure why. GDX is breaking down to another new low. So I don't see. Only thing I could see is that maybe it's so far over on the left side of the chart. I'm not looking at the RRG right now, but just, maybe because the selling was so intense here in August that all of this action here has slowed it down. But to me, we're getting another breakdown, and we confirmed on heavy volume yesterday the breakdown. So I'm not a fan. I don't really see anything at this point that would suggest that a bottom is in. It's been underperforming the S&P for quite some time. I would be not a fan.
Yes. I have to agree with you as far as my decision point analysis goes on GDX. I'm not a fan as well. All right. Well, that concludes our 10 and 10. That was 10 stocks. Can you believe we've already finished it? Okay, there you go. There are the symbols that we looked at today. I will have those up in the Market Watchers live chart list, and that's very easy to get to. You just go to the blogs tab on stockcharts.com and look for the Market Watchers live blog. And there you go. The link will be right at the top. It's also in every single recap article that I write. All right, it is time for our final market update. So let's go ahead and see what's been going on in the markets. All right. You can see markets are mostly unchanged. I mean, we had some difficult times, but the Dow certainly made its way back up. And the S&P 400 is not looking too bad. It did manage to get up to positive territory, it looks like, for a tick or two. And it's heading back down lower. S&P 500, NASDAQ, OEX, Russell 2000, all really having a difficult day. We had a bounce off intraday lows, but it only took back about half of the losses on the day before heading right back down for most of our major indexes, except for the Dow and the S&P 400. TSX, Canadian markets, making their rebound. They have not started back down again, so they might actually make it into positive territory. Treasury yields are mostly unchanged, reading at 2.9%. UUP gap down, but moving sideways at this point. And you can see gold acting in reverse, gap up and moving mostly sideways, as is expected with their reverse correlation. TLT, 20-year bonds, we can see are moving sideways and down. I did write about those yesterday. I'm expecting lower and lower prices there on TLT. Right now, it looks like we're consolidating. USO oil is down slightly, about 0.5% actually, reading at 14.51. It is making a move back up from the intraday lows. Some OPEC news right now is that they want to keep the prices between $70 and $80. Maybe this is applying a little bit of pressure on the U.S. oil fund, which is down about 0.5%. And that concludes the final market update. It is time now to move. It is time to move to Tom, who I know is waiting expectantly right now to show me a chart.
Yeah, I wanted to just show, this is an interesting thing. We've talked about this recently, so I just wanted to go over it one more time. I was looking through the scooters, and I tend to do this quite a bit, looking at the movers. And again, if you just hover over the symbol, you'll see what's going on. So here, EXPD, the scooter's risen up to 80 from 66, so it's up 14. And you put it, you hover over and you see the big move from 73 to 75 today. Makes sense. And you go down this list, and here's CNP. We talked about this one earlier. Got the upgrade. It's breaking out, looks good, and the scooter rises. There's Xylem XYL, which I talked about breaking out earlier. Nice move in the scooter. As I come down this list, I just wanted to show you. Here's CI. So here's Cigna. And all these other stocks that are having big moves to the upside in the scooter have price moves up. But Cigna is seeing its scooter rise 11 points, even though the stock is down, looks like $3 or $4 today. And so I wanted to just point out, because this is something I wanted to point out earlier, and I was trying to do it at the end of the show and just got cut off, ran out of time. But when you see a stock go down like this, sometimes you might think, well, that must be an error. Well, you got to remember how this is calculated. 30% of the scooter rank comes from the rate of change going back 125 days. Take a look at the rate of change, how it jumped here, even though the price went down. And you might look at this and say, well, how in the heck could the rate of change move up when the price is going down? Well, the rate of change, if it's based on 125 days, is simply taking a look at where you are right now versus where you were 125 trading days ago. Well, do you see this huge gap down? Yesterday's close was being compared to this close up here at 194. So it was down roughly about 5%. So that's why your 125 rate of change was -5. But today we're taking a look at where we were, or where we are now, 183, versus where we were at the end of this candle, which was 171. And all of a sudden, we're 7% higher than where we were. So 30% of this company's calculation for scooter made a big jump, even though the stock went down. And I just mentioned that because if you're ever looking through the stock charts technical rank on this homepage and you see that, you have to understand how the calculation, it's just a mechanical formula. And so there are these things where you get the big gap downs and gap ups, and it can have an impact on these scooters. So didn't really have anything else to add for the overall market, but I did want to mention why that scooter was up, even though the stock was getting hit to the downside.
That's always good information.
Yeah, sometimes things just don't make sense until you learn why they do make sense.
Exactly. And I just wanted to answer a quick question in the chat room before we move on. They were asking as to how the 10 and 10 picks are given, since 8 or 9 out of the ones you just looked at didn't look actionable, at least in your opinion. And I just wanted to let everybody know it isn't completely random, but it is dependent on what everybody requests. And if people request not actionable symbols, that might be what we get. But I pick them based on sector, their RRG heading, what's popular. And then, of course, I try not to pick anything that had been looked at within the last week. So that's sort of my little algorithm for that. It has nothing to do whether the chart looks good to buy or not. All right, let's move on to anatomy of a trade. I have a few trades. Basically, what we'll do is we're going to look at some trades that we've made, or, you know, for me, a lot of times there's some paper trades in there. So you can get an idea of sort of how we set up our trades and, you know, how we do take action on them or don't take action, set our stops, etc. So I guess I'll go ahead and give it a start because I have a few that I want to look at. All right, so Guess is one that I'm currently in, and I got into right about, I think I got it, I didn't look it up, but I bought it at about $22, I believe. It was somewhere in here in August. It might have been a little bit more at that point in time. And when I did it, I set my stop right around 21. And what I've done here is I put Keltner channels for a 1.5 average true range, because that was something that Dr. Elder during ChartCon had recommended for setting your stops. So I just thought it'd be interesting to see where my stop lay based on what he had said. And actually it is below the Keltner channel. So if I wanted, I suppose I could tighten it up. But I set that stop at $21, and despite having some pretty serious down moves here, my stop was never triggered. So I'm still in the trade. We got this big spike and I was very excited and very tempted to get in there and sell on that move. But I ended up just not being near the computer. I was not in a position to make the trade right away. And so I decided to stick it out. Did come back in within that Keltner channel Not really what I'm paying attention to, though. But you can see we had that spike. The PMO was, has continued to be very happy since then. So I really couldn't justify getting out of the trade. And you can see OBV has been heading mostly straight up on this consolidation that we had since having that big move to the upside. So currently I'm in that. My target is at $26 plus. So if I had set a hard limit on my order, it would have sold just above the $26 range. But it's more of an intermediate term trade for me. And so I'm still in it. Cody, this was one of the fastest trades I've done in a long time. I got in at about 1278 and I was talking it up sadly on Market Watchers Live. And I think actually we did this as oh gosh, was it not agree or are you buying this? And you said, no, I'm not buying this. And I was like all excited about it. Well, you were certainly correct in that, Tom, because this one did not work out. I got in at about 1278. I believe it was not on the breakout day. It was on the consolidation day, the second one here, the second bar. And I had set my stop below I had set it right around $12, I think. Now it was even tighter than that. It was 12 and a quarter. That's what's marked right here. That was the bottom of that gap up. So I figured if it got below that and closed that gap, I didn't want to be a part of it because it might be considered an island reversal and, headed back down. And sure enough, I got out of the trade. I think I ended up losing like 3% or something. Not anything I like to take, but that's what happened. Cryoport, this is a paper trade. This was my Monday setup choice yesterday since we didn't have a Monday to make our choice. I still really like this one. I might actually go out and purchase it just because we are seeing this consolidation. It's holding on to that support level. It has ticked down a little bit below that. Maybe that scared off a couple of people. So I think it could have some opportunity to the upside. And look at the PMO. The PMO is, it's rising nicely. We don't have the actual buy signal on it yet, which is usually what I like to see. We've got a pretty good hot zone move. And notice that the OBV, even though we've been moving sideways, has been trending higher. So I think this one is still good. I would set my target right about, I'd set it up to $17 and plus. And then looking at that 1.5 ATR range on that Keltner channel, the stop would come out to about 13.25. So that is a trade that I might be setting up later today. These are also paper trades right here, Starwood Property. I think this one's set up very nicely. It's getting ready to close a gap right here that we had earlier. You could make a case for this being an ascending triangle, which is a bullish pattern. And look at that PMO, very nice, very nice. Now giving me that buy signal, and I think upside potential is pretty good. My target is, like it says, about 23.10. And the stop, I looked at using the ATRs, and I wasn't comfortable with as low as it actually was. So I think I decided at 21.70, which is, just a little bit higher than these bottoms that we saw back here. Just as a protection on that particular investment. And finally, Trupanion was the last one. And, I think this one is set up very well, except for, of course, we have this big down move. I like it, though, even though my PMO is turning down below the signal line, mainly because this is some really important support. I'm going to be watching. I actually put this one on my watch list. I'll be watching to see if it can make a little bit more of a rebound, because if it doesn't look strong coming into an upside move at the top of that trading zone, I probably will, forego that particular trade. But that's the anatomy of a few trades that I'm in and that I'm considering. So figured I would move it that way.
All right. Well, as far as the Cody trade goes, I think anybody who trades knows that there is a certain element of tuition that we all pay in the market. Nobody gets them all right. I think the key, though, is making sure you do have your stops in play, because you don't want these trades getting away from you. I know personally that my worst experiences in the market, or my worst years, generally coincide with bad trades that I just let go way too long. They used up capital, and not only losing, more than an acceptable amount of money to the downside, but also that time that capital is invested is time that you can't invest it somewhere else. And so I think that's overlooked quite a bit. But anyhow, let's go ahead and move on there. I have 4 that I'm going to go through very quickly here. Cliffs Natural Resources. I actually own this one right now. I think I talked about this one yesterday, maybe as part of the Monday setups. I talked about it somewhere, maybe a momentum sleeper. But anyway, the stock came back down. It did get close to this 950 level. I think it's got great support right here, just below 950 on that huge spike in volume. A lot of buying took place here when the stock moved from about 880 to 1150 in just 3 trading days. It's come all the way back down. It's worked its way. It's shown very good support around this 950 level. And so far, it's working out pretty well. My only fear is whether or not I take the profit too quickly, because I do have a tendency sometimes to do that. And this next one's a perfect example. I don't know if you recall this one, Erin, but you and I were talking. I told you I bought this stock. It was probably at about 11:30. It was right before I went away. It might have been last Tuesday or Wednesday. I don't remember.
Mm-hmm.
But it was on this day where it went down. And I said I had just gotten in, and it came back up before we even started the show. I think it was back around 9:30 or 9:40. And I was like, yeah, I really hit this one good. Well, it kept going up, and when it got back to 960, and I think it may have been like on maybe a 10-minute chart. Yeah, this was this was it right here. So it bounced back, and it got to this level at 960, where the 20-day move, or excuse me, 20 period moving average was, and it had gone up so quickly that I had my stop in play, or my sell in play, and literally got out of it almost immediately after I got in. I thought it was a great trade, and then look at what's happened. So yeah, sometimes you think you're really brilliant. It turns out you're not nearly as smart as you thought you were.
Hey, if you leave a trade positive, you are brilliant.
Well, you can never lose money taking a profit. That is one
Exactly.
slogan to live by as a trader, and try not to look back. But it's hard not to look back at this chart. And what happened? The company had come out with better than expected earnings, better than expected revenues, raised guidance too, I believe. And you can see it had gapped up with earnings. It was probably 4 or 5% at the open. And then literally in 10 or 15 minutes, it just sold off. And I was looking back, and it's got a series of higher highs and higher lows. And I saw this low over here near $9, and it was coming down. I was like, I'm just taking a shot here. And I jumped in almost on the low. And it was a great trade for 30 minutes or 40 minutes or however long I owned it. But you can see that this one continued going higher. Anyway, that was another pretty good trade, even though it could have been a lot better. Qualcomm, I've spoken about this one quite a bit on the show, but I do like Qualcomm. I actually took profits on this one. I had gotten in after the earnings, and this is one where they came out, not only beat top line, beat bottom line, raised guidance, but then they also came out with that buyback, which was about 1/3 of their market cap, which is just almost unheard of, which guarantees us buyers, really. Qualcomm is agreeing to buy back their stock. So if there's any weakness, you got the company buying the stock. But it's continued moving higher. When it got up to this level, right? Actually, I think it was this double top. I was up near 67. It might have been 67 and a quarter, or maybe it was 66 and a quarter. I don't know. Anyway, I took the profits. And if you take a look back, I still think this one's got a little bit of overhead resistance to try to clear. I love Qualcomm, and I don't know why. Maybe it went back even further than that. Let's do a weekly and go back 5 years. Maybe that was it. I think it did go back a few years. Yeah, here was the 2014 high, right around $70, and we are currently trading $69.97. I love Qualcomm, but as it started getting closer to resistance, I didn't want to take a chance it was going to pull back. And if it had pulled back, I would have re-entered, but it never pulled back, just continued to move higher. Qualcomm turned out to be a really good short-term trade. And then the last one, and I thought for sure, or a little bit ago, Google was going to be a problem for me. It has come back. Let me give a quick update here. Yeah, it's sitting at 1198, which I like a whole lot better than 1175, which is where it was this morning. And it could be a very nice candle off of this recent downtrend. The stock was trading at 1270 just 4 days ago, late last week. And here we are getting a low of 1175 earlier today. So that's a pretty good haircut in Alphabet or Google. And the internet stocks getting hit pretty hard. But I actually think that the reversal here is very bullish in the short term for Google. And if we can close back over 1,200, especially maybe around 1,210, I think that would be incredibly bullish after trading down to 1175 intraday, and with solid volume as well. So those were some of the trades. So let's pull up the summary of the stocks that we just covered. And I was actually sharing Google because I thought it was going to be one of the losers, and I don't know, maybe it'll rebound for me.
Yeah.
It is a good example though of why I use closing stops instead of intraday stops. They can come back to haunt you if a stock breaks down and just keeps moving lower, but it also can be a signal of a major bottom if you have an intraday low and you get a big reversal off of it. So the closer that's the importance, I think, of buying close to support, because I can have the patience to allow it to trade back up, because we don't we don't get that breakdown, and hopefully it marks a bottom. But anyhow, there it is. There's the anatomy of trade. And if we have time, what I'd like to do here is pull up that poll and see why everyone believes the S&P 500 is outperforming all of the other major indices. I think it's probably, I'm going to agree with the majority there. I think it is all of the above. The economic growth, I think it's corporate profit growth. I think it's the U.S. Only 1% says the U.S. projected to be the likely trade war winner. But I tell you, since all of this trade talk, the S&P has been going up and China has been getting hit hard. I'm surprised by only 1% there. But I think a lot of the people that agree with that are saying all of the above. Did you have an opinion, Erin?
I did. I put all of the above. I think, if I'm going to go out and look at something other than the chart, I would have to say really all of those things really do contribute. I mean, I would think that at least some of the investors, as we can see the way that they've voted, that there's a difference of opinion, but overall those seem to be the reasons that people are looking at what we've been seeing as far as outperformance among global entities.
Yeah, and I think that 12%, the mystery, I'll just say this. I believe technical analysis sees things before we start seeing it in the fundamentals. I think that price action is more important than the fundamentals. It's just my opinion. And so the market tells us a story before we actually start seeing the news. If you follow the news and go in the other direction, I can see why I would answer a mystery, because you just see all these negative headlines all the time. And yet you look at the market and it just keeps going higher. And sometimes you just have to scratch your head and wonder why. But from a technical perspective, we don't ask those why questions, right?
Right, exactly. And just really quickly, somebody said, can I pick all of them? Because they have believed all of the above, but they also believe that outperformance won't last. So,
okay. All right, that's a new area for the poll.
There you go.
Anyhow, all right. Well, we got some busy things coming up. We'll bring that schedule up for you in just a second. Another great show. Do want to thank Tim Ord for joining us today. It was very enlightening. And of course, I always welcome anybody that's got a short-term forecast for the market. I love that. Anyhow, I want to thank everybody for being with us today. Please remember to complete the survey as you exit. Love to know what you thought of Tim's presentation. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everybody. Hopefully see you back here tomorrow on Thursday. Happy trading.
Here's how to put a simple line on your chart without using the annotation tool. Let's say we want a line in here at 47.50. You can just drop down here into the overlays, pick horizontal line, add the price point, 47.5, and we're going to use a red line. We're going to make it solid and thick and hit update, and that blasts it into the middle of your chart.